Hello guys, it's Max here from Daily Market Movements. Today it is the 13th of October 2021, which is a Wednesday, which means that we are now at the midway point through this trading week. And before I start today's video, where I analyze the gold, Nasdaq100, S&P500, crude oil and Euro US dollar markets, I just want to say a massive thank you from myself and the rest of the team here at Daily Market Movements to all those who joined us from Monday up until now. Again, we've had a large number of you join our signal service, and if you haven't yet joined but you would like to, then you can go over to our website at dailymarketmovements.com. I've left the website link below this video in the description, and that will take you to our website where we have loads more information about the service that we offer, and you can join for a year's membership for a very small fee of £249. So that's good, just to keep it in mind. Moving back to the markets here, so let's kick this video off with the gold markets. Now, gold, we've had an explosive movement towards the upside during today's trading session. I am bearish on gold. For those who've been watching my videos, I was bearish, especially when we were trading under the 50-day EMA and we were trading at the lower level of this fib zone, which is that red zone. And as this arrow indicates, I was looking for a move down towards, first of all, the swing lows down at 1720, and then eventually down to 1700 to 1680. During today's trading session, we have exploded towards the upside, and we have, more importantly, broken above that 23% fib level, and of course the 50-day EMA, which is that red line on your screens. We're now testing the 200-day EMA, so this is a very important area. If we can break above this blue line here, which is the 200-day EMA, then we go up towards 1830. If we break above 1830, which is the B level here, well, then that would mark the end of this ABC correction that we've been trading in since the beginning of June 2021, and that could see us skyrocketing up towards 1875. So a massive shift here in the gold market from being bearish now, to potentially being bullish. Again, if we can break above that 200-day EMA, which is that blue line on your screens, this will be incredibly bullish for the gold markets, and it could see an explosive move up towards 1830. On the flip side, if we get rejected here at the 200-day EMA, just like we did on Friday, where we tested the 50-day EMA and we come down just as fast as we went up, then we could see a breakdown back in towards the red zone, and again that could trigger a move down towards that 1700 area. But the fact that we've broken above the 50-day EMA and we've broken into this new fib zone, where we're now trading between the 23 and a 38% level on the fib chart, this is very, very positive indeed. And of course the RSI is currently at 58, so we still have plenty of upside. We still have plenty of room to run towards the upside until we would be considered to be overbought. So massive shift in gold here towards the upside, very bullish for the bulls here, and it's not looking so good for the bears, but it all depends whether we can break above this 200-day EMA. Moving over towards the Nasdaq100, we have seen a breakdown from that 50-day EMA. We haven't been able to break above that 50-day EMA, and it sent us trading back down towards this uptrend that we've been trading in. I mentioned last week we did find some support on this uptrend line, which shot us up towards the 50-day EMA. So the big question was, during this morning, is whether we, during the trading session today, whether we were going to see a continuation of a move down towards that downtrend, or whether we were going to bounce and try and retarget that 50-day EMA. And of course we've seen a bounce during today's trading session. It's whether we can now continue this upside movement and go and retarget and break above that 50-day EMA. Once we break above that 50-day EMA, I think we go up towards the all-time highs. For those who do not know and are new to my channel, I did buy at the lows here. I cherry picked the bottom on this uptrend line, where I have my stop loss just below the 200-day EMA, which represents a 3.78% decline from where I entered this trade, and I'm targeting back up towards the all-time highs, which represents a 8.79% gain if that was to hit my take profit. But RSI is looking very healthy. We are below 50, so we are at the lower half of the RSI, which gives us plenty of room to run towards the upside. Very similar over here on the S&P500. Again, we've been rejected. I did buy at the 50-day EMA, thinking that we were going to break above, which was a slightly more risky trade, and I have my stop loss. If I just drag it down, because my stop loss is just below the swing lows there we go. which is which represents a 2.84% decline from where I bought, and my take profit will be up at the S&P 500 all-time high, which represents a 4% gain from where I purchased this trade. At the moment, we've been rejected from that 50-day EMA. That's what I've circled up on the chart here. I'll just zoom in a little bit to make it a bit more clearer. The big question is whether we now go and take out the swing lows. If we take out the swing lows, then I think this trade could easily go and test for 200-day EMA, which is down at 4,154. That being said, I actually favour a move back towards a 50-day EMA, and I think eventually we break above the 50-day EMA and we go and trade back towards the all-time highs, especially as we go into the month of November and December, which are historically speaking very bullish months of the year with regards to stock market performance, and especially January, of course. January is a very, very good month for stock market performance. So I think a bit of seasonality trading will come in, and we will see some more upside movement as we go in towards the end of the year. Moving over to the crude oil markets. Crude oil markets have been trading rather steady, but it's very good news for the bulls here because we have managed to stay above the $80 price level. I mentioned on Monday how important gaining that $80 price level would be here for the crude oil markets. $80, of course, represents a large psychological figure, and typically speaking, it could act as the roof in the market. But instead of getting rejected at the $80 level and trading back down towards a 50-day EMA, we have just gained and we've held steady up at $80 a barrel. And this is fantastic news because this now allows the RSI to cool off. Once the RSI comes down to perhaps 65 or 60, we may see that continuation up towards $65 a barrel. We've seen many banks come out this week saying that $100 crude oil trading up at $100 a barrel is very possible in the near term future. I'm talking 3 to 6 months time. So very exciting time here for the bulls here for the crude oil markets. I wouldn't be shorting this market. As you can see, we've been trading towards the upside for some time now, so I wouldn't fight this trend. Just I would just play along with it. But one thing that I would say with the crude oil markets at this moment in time is that the RSI is still 71, which indicates that we are overbought. So I wouldn't put too much money to work at these high levels. If you haven't yet opened a crude oil position, I would wait for a pullback to at least that $77, which was the 1% price level on this fib chart. And if you do hold a buy position from this lower 200-day EMA, then I would continue to hold, as I do anticipate higher prices here for the crude oil markets. Moving over to the euro US dollar, last but not least, again we've seen very slow price action here. 1.15882 we are currently trading at, and we haven't quite yet hit that 50% fib level, which is down at that 1.15 area, so we're still 800 pips away from achieving that. I did say that now that we've broken below this support that we where we previously bounced on the 2nd of November and the 25th of September 2020. Now that we've broken through that supportive area, we were very likely to go and target the 50% level here on the fib chart, but we haven't quite got there. And actually, in fact, today we have seen a bounce in the euro US dollar. So what does this mean? Does this mean that we go and retest the 38% level here on the fib chart up at 1.1, well, pretty much up at 1.17, and of course that's where the 50-day EMA is. So the euro US dollar, if it is to go back up towards its swing highs up at 1.22, it's got its work cut out for itself, because we'd have to see a break above these important fib levels. We'd have to see a break above the 50 and the 200-day EMA. So it has got a lot of work to do towards the upside. But as I've mentioned in previous videos over the past couple of weeks, I am incredibly bullish on the euro US dollar. I think the Fed has absolutely murdered the value of the US dollar, especially with all these massive stimulus deals. I think there's still another 3.5 trillion stimulus deal to come this year. Sorry, that's a $3.5 trillion stimulus deal, I should say. So I am bullish on the euro medium to long term, especially compared to the US dollar. But I'm going to wrap it up there for today, guys. That's my midweek analysis for the markets. Of course, as always, I will do a video on Friday. I am traveling on Friday, so I'll have to post a video in the morning where I will just update you and conclude this week's movements in the markets. And of course, for those who are interested, as I mentioned at the start of this video, if you would like to copy my trades, please feel free to head over to my website, dailymarketmovements.com, and you can copy my trades for a very small fee of £249 for a year. And as always, guys, this video is not financial advice. I'm just sharing with you my thoughts on the markets and my trades. If you wish to copy, then please do feel free to do so, but please do make sure that you are doing your own research. Gonna wrap it up there, guys. Thank you very much for tuning in for today's video. If you haven't done so yet, then please give this video a thumbs up and subscribe to the channel for more videos. Thank you, guys.